Good morning and welcome back to Money Markets from True Potential. Paul Durrance, Investment Director. Today we're going to be looking at survey data on the manufacturing and services side and why this is important to investors. On Friday we received business surveys from the US, Europe and the UK. Starting with the US, what we saw on the manufacturing front was an important trend where we saw a change from where businesses previously were reporting contraction, and they have been doing since October. Actually, for the month of March, they reported an expansion in business activity, and that was really linked to an improvement in employment front, but also improvement on the new orders. When we look at services, they continue to be very healthy in the US, where consumers on the whole are still preferring to go out there and experience things and also travel, and that's really helping to support business growth in services. And that's despite prices have been higher over the last 12 to 18 months. There's still that demand, and there's more of that demand domestically within the US rather than internationally. When we look at the likes of the UK and in Europe, what we're seeing is a diverging trend continuing where services continue to hold up well, but it's the manufacturing side that continues to suffer as demand for goods remains low. On the positive side, when we look at the UK, Germany and France, what we're seeing is improvement in supply chains, and businesses are actually running down inventory, and combine that with low demand has mean that prices are falling, which should help the inflation picture. On the services side, given the high demand there and the demand for labour, that is pushing up wages, and that means that inflation might be a little bit more stickier on the services components. Why does all this matter, and why do we focus on these business surveys? Is because it's very timely. We get frequent details, and the different subcomponents really helps us gauge what's the strength of economic growth, not just today but perhaps in the future. Also allows us to gauge how the inflation picture may evolve and what that means for interest rates. What we can conclude therefore is that in parts of Europe there are still some strength, particularly on the services side, despite sentiment being relatively subdued. In the US, an important shift of manufacturing seeing improvement, which means that could see the economic growth the economic cycle be prolonged despite interest rates pushing higher. That's everything from us today. Thank you for listening, and we'll see you tomorrow.